good at different areas. Today is real estate. We have Christina who's going to share some of her knowledge and experience in real estate and some of her journey to get to show us exactly how it is that her company operates. She is the CEO of Westlake Realty, based out of California. So I'm not going to do her justice. Christina is going to be able to kind of share with that. And without further ado, Christina, if you don't mind telling us a little bit about yourself, thank you once again for joining us. Telling us a little bit about yourself. I do know that your company is family owned, which is phenomenal. I love hearing that. A little bit about your journey, how you started, how the company started, and where it's at today.
Perfect. First of all, thanks so much for having me. I appreciate it very much. Kristina Chang. I run Westlake Realty, third generation single family office. My grandfather started buying up real estate in Silicon Valley in the early 70s when a lot of the tech companies were getting started. Today, my family owns about 30 properties in the US and Japan, mostly in the greater Bay Area. And I'm very entrepreneurial. So I love that, I appreciate and respect the entrepreneurial nature of the podcast itself. And I've grown uh, an investment practice in industrial niches within real estate and bringing in family and friends to invest with us over the last 5 years. And so I have an institutional quality team that manages my family's portfolio, and then we're building out this platform together. And so I own all sorts of real estate that's in our legacy portfolio: office, retail, hotel, multifamily, land holdings, etc. But we're primarily focused on industrial niches. So our first niche was self-storage, which is fairly explanatory. That's, your public storage is your extra spaces. We bought 8 of those, one of which we built from the ground up. And then about 2 years ago, we pivoted into industrial outdoor storage, which is a mouthful. So we call it iOS instead, not to be confused with your iPhone. But it's a niche category that not a lot of people know about. And so to be able to bring direct deal access to my family and friends is something that really motivates me and that I get really excited about. And iOS is, you can think of it as any industrial real estate property that has a floor area coverage ratio, floor area ratio, FAR, of 25% or less. And so that could be anything from just a dirt parking lot where people park trucks, all the way up to a building that takes up 25% of the area of the site, and then just parking lot, asphalt parking lot on the rest of it. They range from dirt, all different types of gravel, up to brand new asphalt. And think of them as like service companies. So contractor lay down yards, anything to do with trucking, truck parking, maintenance of those trucks, storage of those containers, and everything in between, equipment rental. It's a lot of service uses, and it is a category that has not really gotten a ton of investor attention up until fairly recently. And most of that attention has been on the East Coast. So we're focused on the West Coast. It's an opportunity that we're super excited about. And that's sort of where I'm spending the vast majority of my time right now. But really love doing deals, rolling things up, and just rolling up my sleeves and being entrepreneurial. That's a great point. Like, so many accredited investors will get access to apartment deals, but they don't see industrial. They don't see other asset classes that are more niche that people don't talk about as much. And so for what we need from investors is for them to be accredited and certified as accredited. And then they fill out our subscription documents. They give us the capital to help us buy it. And then we send distributions every 3 months. And we sell the property after anywhere from 4 to 7 or 8 years after we buy it. So you get checks in the mail every few months. Every year you get a K-1, and it's pretty simple for the passive investor. I like to have friendships and relationships with all of our investors, and I'm proud to say that up until now, we've been able to accomplish that, and over 90% of our investors have invested more than once with us, which is something that I'm super proud of.
Excellent. So it's essentially you have a core group of investors, family, friends, and then that's kind of expanded, and you're expanding in that area, which is great. For your typical investor, like, again, going back to the residential, because I think most folks, that's what they're familiar with. You have to deal with being a landlord, things that happen. I own a couple properties myself, and those types of things will always happen, and it's a nightmare. It's one of the reasons why I'm hesitating on buying any other these types of investments. Is it pretty much hands off as an investor? What is involved in terms of responsibility? I'm assuming that there's some sort of What risk is there aside from the regular, but what on a daily or week or monthly basis? What does an investor have to do essentially? Is there anything at all that
That's
they
a
have to?
great question. So it's passive. So I own a few apartment buildings on my own as well outside of my family's business. And I always laugh when people tell me that real estate's a passive. They just want real estate so they can create passive income. They want to buy apartments for passive income. I'm like, wow, that's, are you managing yourself? It's not that passive as I think as you probably figured out. Um, and that's where the value add is that for our investors, it truly is passive. They send a check and they're getting checks in the mail. We do the work. We're working to put in new tenants. We're working to do all the capital improvements. We're adding the value and on the ground daily, monthly, weekly, and responsible for the property. And that is where the value add is. And I think people who've actually purchased properties and managed them themselves, like you, can appreciate that there is added value in not having to take that active role. One of the things that I've noticed in my career in real estate is people are very focused on the buy, but there's a little bit less of a focus on the asset management. And almost everybody who works with me has worked in property management at some point in their career. And unless you've done it yourself, unless someone's called you to unclog a toilet or do something at like some ungodly hour of the day, you can't appreciate what it's like to actively manage a property and move the needle in creating value. And that's what we're really good at, and that's what we love to do.
That's excellent. I love hearing that. New ways of investing your money, especially nowadays when things are, as we all know, with the stock market, you just, crypto got, it goes up and down. I think right now a lot of folks are wanting to invest their money in somewhere safe, that they could get this passive, have a passive income. So I love the idea. This is something that I think you mentioned. I'm assuming this is a relatively newer shift or opportunity for in your industry, or has it been going on for a while and it's just recently that your team is going into working with the industrial piece of it?
So it's been going on for a while with industrial outdoor storage. I mean, the markets are pretty fairly similar in size, self-storage and industrial outdoor storage. But we jumped in the space in the last few years. My head of acquisitions has done a few of these deals, and we're getting ready to close our first few at Westlake. And the value that we bring as a sponsor is that we've seen every asset class in the last 50 years. And we jump in when we see alpha and certain little categories where we're like, wow, that's being overlooked. We should go look at that. And we can kind of be nimble based on where we're seeing outsized returns.
Let me ask you about opportunities for growth, expansion. Those are some of the really important goals that I'm sure you and your team have. Now, you want to kind of look at East Coast, see what else, what we could do aside from just the West Coast, but maybe generating some attention from some potential investors on the East Coast. That would be great. Also, what's the biggest challenge or pain point that you could think of that you're dealing with right now as you're looking to expand further?
I think for us, the biggest pain point is finding great deals. The world has changed a lot, and I think that's part of the reason you're seeing a increased attention into some of these more niche areas of real estate where there's not a lot of institutional owners. And most of these properties are owned by mom and pop landlords. I think I heard a statistic is like 40 or 50% of iOS properties are owned by owner users. And so that's like the company, little family business makes doors. They own the real estate underneath them where they're making the doors. And that would be an example of an owner user. But our biggest pain point is being able to find great deals because our standards are very high. Just being blunt, like we don't do funds. We do everything on a deal by deal basis because we do the best deal of the year when we see the best deal of the year. And that means that we're always looking for that next best deal. And so we use AI in a way that I don't think you could have a few years ago to take the submarkets that we're interested in. We look at a macro perspective, identify submarkets that we're really interested in, and then we have AI that identifies the zoning and then the size requirements. So we're like, we like 5 to 20,000 square foot buildings with 2 to 6 acres of yard. Tell me all of those that are A, either owned by owner users or B, owned by what looks to be online, like a mom and pop owner. And then we call those owners until we get traction. And then we also work with local brokers and larger brokers. But that picking up the phone call and that being on the ground, meeting with people there's no substitute to talking to people and being there in person. And as we scale, that becomes more and more difficult to scale and to continue to find great deals.
Gina, to give you kind of that focused target area, and then going after it, and then creating that value for your investors. So you have AI working on that side of the fence. Like in terms of the investors, are you pretty good in terms of the investors? That you have a good group of investors that are ready to go, and essentially as soon as you have a good opportunity, you could act on it, and then you have funds.
I am very blessed. We have a great group of investors. We launched a deal 2 days ago, and it's like 3/4 of the way filled right now. So we're very lucky, but I'm always looking to connect with new investors. Our minimum check size is 200 grand, but we've made exceptions when I get to know people and they're great people and they want to put 100 grand into every deal that we do. Then we love working with those people as well, especially the ones that support us programmatically. Um, but yeah, we're always looking to connect with new investors. I think one of the benefits of you having kind of an East Coast viewership is that East Coast people are going to see East Coast deals in large part, and building a diversified passive income stream of real estate. It's good to do that in a diverse set of asset classes in diverse geographies, the same way you would build a good public markets portfolio.
Yeah, definitely. I guess for the audience out there, let's say I do have that disposable income, 200K. I'd love to talk to you and your team at a high level.
It's a great question. It varies on the deal. Some deals have cash flow right off the bat. We're buying a credit tenant, national credit tenant. Everyone would recognize the name. They have 2 years left on their lease, then they have a 3-year option, then they have a 2-year option after that. And so it's a little funky. We probably have to hold it for 8 years until we negotiate a new lease with this tenant. But that is pretty much like bond income. Like they're very unlikely to leave. They've been there for over 20 years, mission critical to their business in the region. And that one will spit off 5% cash on cash returns straight away from year one. And and then it steps up from there. The rent goes up 3% every year. And that compounding is beautiful from a landlord perspective. It basically gets you, people are like, wow, what does compounding do? And I'm like, wow, well, you can take year one, you're looking at, 5% give or take. By year 7, that's close to 9%. And so, I mean, that compounding is real. And for those who haven't invested in passive real estate before, that gets taxed as return of capital, which means it doesn't get taxed. So if you put $100 out, you're getting $5 that you're not paying taxes on at the end of year one, and so on and so forth as you get your money back. And our goal is always to be doubling everyone's money every, 5 to 7 years.
I love that, and I know a lot of my listeners their ears are gonna perk up. That's a really good return on investment, and obviously from a security safety perspective, it's definitely sounds like it's a really safe investment as well, which is
Sometimes
important.
yes, and sometimes no. So that's a very credit tenant. iOS is the whole spectrum of credit worthiness of tenant. And so we have another deal that we're going in. It's basically no cash flow, I think probably for at least a year. We have 2 tenants there. You have to get both of those tenants to market rent, and they're very far from market because a family has owned this property for 70 years, which is insane. And it's operated by a trust. They don't even have an active landlord there. It's crazy. It's kind of blew my mind that deals like this still exist. It would be tough to find deals like this in multifamily where some families owned it for 70 years. That one, low cash flow, but then by year 4, by end of year 3 and year 4, you're getting close to you're getting a 9% yield. Like, so in half the time you're getting to that 9% number, and then we'll either sell it or refinance, and then we give some of the proceeds back to our investors and hold it for a little bit longer, or we just sell it. And so our goal, I mean, this is a cash flow play, whether you're going in with cash flow or whether you need to do the work, whether we need to do the work to get it to cash flow. That's why we like this asset class. So we're pretty laser focused on the target markets. We're Denver and West, but then we're also Laredo, Texas. So we look at Laredo and McAllen. It started because I live in San Diego and we looked at the border here and we said, wow, that's some expensive real estate. And that prompted a search of every border crossing between here and East Texas to find the border crossings that we thought that we could unlock the most value. And there's been a lot of run up in value in those border markets in the last few years. And then in the last 12 months, with all this tariff stuff, there's been a big dip and a lot of softening. And we think that's a huge opportunity to jump into the market because we think that's short-term dislocation. And so those are markets that we're really excited about, maybe a little more familiar for East Coast investors to be in Texas and not in California. I know California scares a lot of non-Californian investors, but if there's one thing you know about California, it's hard to get stuff done. And they're not going to zone any more land for heavy industrial. It's just not going to happen. It's not going to happen in infill areas in California. And that creates real barriers to entry.
Yeah, I definitely agreed. I've definitely heard some stories for sure. And then just to kind of finish up here, Christina, like how can if we have anyone from our audience that wants to get in touch with you, wants to chat, have a little bit deeper conversation, what's the best way that they could get in touch with you or somebody from your team?
So I love talking to people and meeting new investors. So just reach out directly and email me. I'm sure there's some link in the description that'll have my direct email address. Just reach out and we'll schedule an intro call. I love meeting new investors and hearing about what investors are looking for. And just having that personal connection, it means a lot to me.
Excellent. I love this conversation, Christina. Thank you so much once again for joining us. I appreciate the insight, the info, and I know that our listeners there's going to be a lot of this niche market. Great opportunity with some really positive upside on the back end. So thank you so much. You have a great day. Appreciate it. Bye, everyone. Have a good day. Thank
Awesome.
you.
Thanks, everyone.
Bye bye.